So we took a look at the data for the last month because the Fed is saying that it's data-driven. So if it's data-driven, let's do that. If you look at the data, 80s, 90s, 2000s, you'll see that inflation came down during times when the economy was very strong. Why? It's because of productivity. Productivity growth is a byproduct, a critical byproduct, and an anti-inflationary byproduct of good, strong recoveries. Let's go to the commodity prices. Again, data-driven Fed, are you listening? We'll start with, from their peaks, we've got gold price, the gold price down 17%, copper down 30%, lumber down 73%. Think about that. Housing is collapsing. Iron ore down 45%. Infrastructure around the world has run into trouble, especially China. Corn down 17%, silver down 29%, DRAM prices, which are chips, semiconductors, down 46%. The Baltic Freight Index down 48%. That's an indicator of supply chain issues. The Baltic Freight Dry Index, which is just for dry goods, down 65%. Oil down 29%. And many people have been dismissing these and saying, yeah, but they went to sky-high prices. They're still not down on a year-over-year basis. That's not true anymore. Gold is down 3%. Copper is down 17%. Lumber is down 28% on a year-over-year basis. Corn is an exception. It is up 27%. Again, Ukraine being a big problem there. We have silver down 9%. DRAM prices down 33%. Oil, oil and corn. Oil is up 14%. It's had a big pop recently, but we do think, having come down from $130 to $90, it is in a downtrend, mostly because of demand destruction. There's another kind of esoteric price out there. I remember it from my days diving deeply into economics, and it's container board prices. This gives you a sense of how tight the box market is because of a huge amount of trade taking place. So they are down 29% from their peak and about 53% from a year ago. Just taking the evidence and putting it together like this, there is a lot of data to be driving the Fed, which is what they say is happening. But we don't think it's happening. I just rattled off lots of examples. So let's go to the markets and then wrap up pretty quickly here. Not much to say. Markets are selling off across the board, and that's very unusual. It's associated with crises and more convincing evidence to us that the Fed is too tight and that it will pivot. And when it does, it will do so, we think, significantly. Now, first, it might simply be rhetoric, because they always like to tee us up for what the next moves are going to be. And we haven't heard that rhetoric yet, despite all the evidence I just shared with you. But that evidence I just shared with you tells us that the Fed is going to get the message loudly and clearly somehow. And it may not be showing through in the numbers they want to see, but it will. It will. They are huge lagging indicators. They're basing policy on lagging indicators, not what they're supposed to be doing. If you take equities and bonds and look at what's happened since the peak, you will see that the loss to investors is more than twice what we saw in 08-09. That's how bad this is, because bonds are selling off with stocks this time. And one of the reasons for that is a seizing up of liquidity. As I mentioned, if people are facing margin calls or in financial difficulty, they're going to sell their most liquid asset. They will have no choice, especially with margin calls. Most liquid assets tend to be government bonds, and I think that's why we're seeing the backup in government bonds here, despite all of the deflationary signals in the pipeline. Interestingly, it feels like we're moving towards a cathartic moment is going to result in some financial signals that the Fed will have to pay attention to. Maybe it didn't have to pay attention to the guilt trip, but it should, because it is the reason that near Lehman event happened in the UK. It is darkest before the dawn. We think the pivot is close, and we certainly hope that the Fed gets away from this need for unanimity and a united front, when really we have all of these Fed members and presidents for a reason to debate. And we feel that that debate is being stifled. The debate should be driven by data, but it cannot be. If it were, they would not be unanimous in their thinking right now.